International Public Sector Accounting Standards, or Ipsas, are global rules for public sector financial reporting. They create a common language for government finance, making it easier to compare financial health across departments and countries. Ipsas is developed by the International Public Sector Accounting Standards Board to improve the quality and transparency of public sector financial reporting. Without Ipsas, each government entity might use its own methods, making it hard to see the full financial picture. In Pakistan, where public resources fund everything from infrastructure to healthcare, transparency is crucial. Ipsas moves accounting from simple cash-based systems to accrual-based, recording transactions when they occur, not just when cash changes hands. This gives a more accurate view of government finances and builds trust with citizens and international lenders. Using Ipsas signals a commitment to good governance and financial discipline, attracting investment and support. For citizens, it means they can see how public money is managed and hold the government accountable. Ipsas is about more than numbers. It's about good governance and telling the nation's financial story clearly. As Pakistan pursues greater transparency, understanding Ipsas is essential for public sector professionals. It's a key pillar for modernizing public financial management and ensuring resources benefit all citizens. Ipsas 13 sets the rules for accounting for leases in the public sector. A lease lets one party use an asset owned by another for a set time in exchange for payment, common in government, like leasing vehicles or equipment. Ipsas 13 distinguishes between finance leases and operating leases. A finance lease transfers most risks and rewards of ownership to the lessee, like leasing a machine for its entire useful life. In this case, the lessee records the asset and a liability for future payments, giving a true picture of resources and obligations. An operating lease, by contrast, keeps risks and rewards with the lessor, like renting a photocopier for a year. Here, lease payments are simply recorded as expenses. The asset stays off the lessee's balance sheet. This distinction affects how assets and liabilities are reported, impacting the perceived financial health of public entities. Ipsas 13 ensures financial statements reflect the real impact of leases, preventing hidden liabilities. By recognizing finance leases as assets and liabilities, Ipsas 13 provides a more honest view of public resources. This clarity is vital for auditors, policymakers, and the public to understand a government's true financial position. Accurate asset accounting is essential for government transparency and efficiency. Governments manage vast public assets, roads, buildings, equipment, funded by taxpayers. The public deserves to know what assets exist, their value, and condition. Ipsas provides a systematic way to record and report this information, preventing mismanagement and loss. Transparent asset management builds trust and allows citizens to hold government accountable. Good asset accounting helps managers make informed decisions, like when to replace aging vehicles or repurpose underused buildings. It also supports long-term planning by recognizing asset depreciation and maintenance needs. This prevents infrastructure decay and ensures future generations aren't burdened with costly repairs. Ultimately, transparent asset accounting secures a more sustainable and prosperous future. It's not just about the past, it's about responsible stewardship for tomorrow. Applying Ipsas 13 in Pakistan means looking at how government entities use leases to acquire assets. Take a provincial health department, leasing MRI machines for nearly their entire useful life, a finance lease. Ipsas 13 requires the department to record the MRI as an asset and a corresponding liability for future payments. Each payment reduces the liability and includes a finance charge. The asset is depreciated over its useful life. Now, consider a district office renting space for a 6-month project, an operating lease. Here, the building isn't recorded as an asset, nor is there a long-term liability. Rent is simply an expense. These examples show how Ipsas 13 focuses on the substance of the lease, not just its legal form. This ensures financial statements reflect true control over resources and obligations. By applying Ipsas 13, public entities can't hide significant assets or liabilities off the books. It brings discipline and clarity to public sector accounting. For Pakistan, this means more reliable financial information for decision-makers and the public. It's a step toward greater accountability and better management of public resources. Ipsas 13 is about showing the real story behind government leases. Pakistan Railways owns vast land, much of it leased out for commercial, agricultural, or residential use. Some leases last decades, making proper accounting crucial for understanding the true value of public assets. Under Ipsas 13, each lease is classified as a finance or operating lease. A 99-year lease, for example, may transfer most risks and rewards to the lessee, a finance lease. In this case, Pakistan Railways records a lease receivable instead of the land, reflecting future payments. This approach highlights the long-term economic benefits and brings transparency to public asset management. Shorter leases, where risks remain with Pakistan Railways, are operating leases. The land stays on the balance sheet, and income is recognized steadily. Consistent application of Ipsas 13 across thousands of leases would clarify the financial position of Pakistan Railways. It allows policymakers and the public to assess whether public assets are managed effectively. Ipsas 13 brings discipline and transparency to managing valuable state land. Implementing Ipsas 13 in Pakistan faces major hurdles. Many government staff lack training in accrual accounting and lease standards, making the transition from cash-based systems difficult. Accurate lease data is often missing or scattered in paper files, complicating compliance. For entities like Pakistan Railways, digitizing and verifying thousands of leases is a massive task. Resistance to change is another barrier. Accrual accounting demands more transparency and exposes long-term liabilities. Some officials may resist due to increased workload or fear of scrutiny. Implementation also requires investment in new IT systems and specialized staff, straining limited budgets. The process is complex and long-term, needing careful planning and phased rollout. Coordinating across federal, provincial, and district levels adds further complexity. Overcoming these challenges requires strong leadership and sustained commitment. Overcoming Ipsas 13 challenges requires a multi-pronged approach. Comprehensive, ongoing training is essential, led by the Auditor General and professional accounting bodies. Building a pool of Ipsas experts ensures sustainability. Improving data management starts with a digital census of all assets and leases. Investing in modern financial management systems automates complex calculations and reduces errors. Strong political will is vital. Commitment from top government levels must translate into clear directives and budgets. A phased rollout, starting with pilot departments, allows for learning and smoother expansion. Collaboration between finance offices and ministries fosters shared ownership of reform. Public awareness campaigns help citizens understand the benefits, creating external pressure for compliance. Together, these steps can drive successful Ipsas 13 implementation and lasting change. Pakistan is committed to adopting Ipsas for better public financial management. The Auditor General, with international partners, is leading a phased transition from cash-based to accrual-based accounting. Key steps include revising the chart of accounts and creating new codes for assets, liabilities, and leases. Capacity building is a priority, with training programs for finance and audit staff. Professional accounting bodies are integrating Ipsas into their curricula, preparing future professionals. The transition is gradual, starting with memorandum accrual statements alongside cash-based reports. This allows staff to gain experience and systems to be tested before full implementation. As capacity grows, the goal is to produce fully Ipsas-compliant audited financial statements. This commitment marks a positive shift toward transparency and accountability in Pakistan's public sector. Embracing Ipsas 13 brings profound benefits for Pakistan's public sector and citizens. It enables better decision-making by providing a clear view of assets and long-term obligations. Managers can plan strategically, moving beyond short-term fixes. For the public, Ipsas 13 means greater transparency and accountability. Citizens can see how their money is managed. This transparency deters corruption and builds trust in government. Internationally, Ipsas compliance boosts Pakistan's credibility, attracting investment and favorable loans. It's a necessity for economic progress in a globalized world. Mastering Ipsas 13 is about building a responsible, efficient, and trustworthy government. While the journey is challenging, the rewards are immense sustainable development and public welfare. By staying committed, Pakistan can unlock better governance and prosperity for all.